Right, welcome everyone to this video, and in this very video we'll be talking on the topic candlestick formations that reveal real buying and selling pressure. So as long as advanced price action trading is concerned, you can't do away without the candlestick formation patterns. It's very important. There are so many candlesticks in the financial market. Like I said, majority or all these candlesticks you see right here, excuse me, have a name and what they stand for, right? The name may not really matter, but I think knowing what they stand for is very necessary. So that once a particular candlestick pattern form in the market, you should get ready and know the next action that is going to happen. So candlestick pattern are the language of price action. That's why our chart are always naked, no line indicator, or whatever algorithm people write to detect the market. Each candle reflects a battle between buyers and sellers during a specific time frame. When read correctly, candles reveal not just what happened but why it happened, giving insight into the real flow of buying and selling pressure in the market. So first, the psychology behind candles formation. Every candle is a product of market psychology. A bullish candle shows buyers close higher than sellers open. A bearish candle shows sellers dominate the session. The size of the body and length of wick indicate the strength or weakness of each other. Understanding these dynamics let traders detect shifts in control before major price move in the market. So candles that indicate buying pressure. We have the bullish engulfing pattern. When bullish candle completely engulf the body of the previous bearish candle, it shows buyers have taken full control of the market. I'm not going to stay deep on this. I have a course on this. You can go through my catalog. You see a course with name Forex Trading Candle Patterns or Candle Formation Patterns in Price Action, something like that. But I know candlestick formation is there in the title among my courses. In that course, I've taken time to illustrate. Okay, I may attach the course link, or I'll do that when I'm broadcasting also. But all what you need to know is that these candles have meaning, and I'm going to do illustration of bullish engulf. First of all, where should you look for bullish engulfing pattern? You should look at it at a resistance zone. This is the scenario of the bullish engulf. It is a two candle pattern. First, you see a bullish candle form and complete. In my chart now, using green to represent the buy candle. Let's assume this is the wick, right? The next thing you see a very strong body bearish candle completely engulf the previous bullish candle in a way that if this was a real war scenario, this is two human beings. This is a taller human being, this is shorter. If someone stand right there trying to sight this direction, this person standing here may not be able to see this person standing here because this one is very tall and completely engulf this other candle, right? So that is bullish engulfing candle pattern. I usually look out for it in a resistance or supply zone. Then we have the hammer candle appears after a decline showing rejection of lower price and strong buying interest, right? These are some of the buying candlestick pattern. You can go to the course that I just talked about, or personal research on Google is also can help. Here we have the morning star, a three candle pattern where bearish momentum weakens followed by strong bullish recovery, right? So this is a doji candle right here indicating indecision, right? Indicating indecision. I think I've made a mistake somewhere, please pardon me. The bullish engulfing pattern that I just finished describing usually form in a support zone. Rather, what I was illustrating in that place was, okay, this is a bearish engulfing pattern. I'm happy I realized that still within the video. Bearish engulfing pattern. This one formed in a resistance or supply zone. Then we have the bullish engulfing pattern formed in a support or demand zone, and it is the inverse. In this case scenario, it is the bearish candle that is going to form first, then followed by a strong bullish candle that completely engulf the first bearish candle that forms. So whenever you see this, know that sellers are taking over the market, and it's going to come with a very strong, momentum or volume, right? Some of these candles, there are some that will form, and the movement that is going to happen may not be that strong, but this very one, bearish and bullish engulfing pattern, whenever I see this form, then there might be a long movement that is going to happen depending on the direction that you were trading, right? So I was about talking the morning star. This the morning star candle, and you can look out for this still in a support zone, right? It is followed by strong selling candle, then doji. Indecision. This simply means neither buyers or sellers are actively in charge of the market. The next thing you see the market wake with a bullish candle, though it may not be equal or same level with this. Yes, I've taken time in that course. I've tried as much as I can to identify some of these candle live on chart like this, because what I want you to note is that sometimes this candle is not going to appear like this on the chart. Like the way I sketch it or the way you're going to read online might be too perfect, right? Might be too perfect, either with shadow or no shadow, but you should just have the conviction, read it to understand that sometimes you're not going to come across this candle so perfect like I'm doing illustration here right now. So that is the morning star. These candles often appear near demand zone etc., or at key structural low, confirming institutional buying, right? These are institutional presence or introduction in the market. So whenever you see some of these candlestick pattern, know that institutions are coming into the market. And the candle that illustrates selling pressure, bearish engulfing pattern, talk about that. A shooting star, this is it. Shooting star is come with a very long wick and usually form in a support zone. Typical example is this. I mean, in a resistance zone. Typical example is this. So what do I just said something that sometimes you will not see this candle perfect the way the sketch on the courses or materials online, right? And this typical example. What do you notice between what I sketch and this one? What I sketch have a wick above, I mean below the candle body right here, right? This is a wick. But this one forming here is completely flat. There's no wick on the lower side of the candle body. That's why I said it's not going to be the same always. What you have to notice is that in the case that this candle have a lower wick, take note what the wick on this part of the candle is going to be multiple times, like twice or three times the size of these other parts of the wick. Take note. So sometimes it may appear that way. Then we have the evening star. This also happen in a resistance zone. How does the evening star look? This is the evening star. I'm done with this. I think I can take this out. I can use this to form the wick. Okay, so this evening star and this is a doji. It's just like the inverse of morning star that we read, right? So this form on a resistance zone. So whenever you see this announce the presence of institutions. So you should be ready to take a sell trade after you might have confirmed this. Please, you don't jump into the trade while this candle is still forming. You might have confirmed this happened as well. This is the active candle depending on the time frame that you're using. This candle is still forming. You cannot take decision while the candle is still forming. You have to let this candle form and complete. You confirm that this is a bearish candle and this bearish candle is strong to certain level, though it might not be equal size with this, right? Take note. So you only take entry at the close of this candle and the opening of the next candle depending on the time frame. Very important. So there are so many of them, but I only listed just few. So these candles often see near resistance or supply zone. I've said that candle showing indecision, doji, spinning top. I told you this simply means neither buyers or sellers are actively in charge of the market. So when this appear after a strong move, the one that reversal or pause may be near. Definitely comes a change in direction, right? Next, or it can lead to continuation. Nothing is certain in the market, but just note that this is indecision. So the next point, you can also combine candles with context. Candle alone don't guarantee accuracy. Timing depend on context. Always combine them with market structure, like I said, key level, support and resistance, volume and liquidity clue. So in a situation that you see this candle formation in between market or mid market, what are you going to do? It doesn't announce there's no strong conviction or confirmation that taking decision is guaranteed. If you see any of those candlestick pattern forming mid market, in this case, do you see this is a shooting star right here? Mid market that the price already took off from a key level. Does this really signal anything? The price might have still continued selling after this candle, but entering the trade at this point is very risky. So when this candle pattern form in a zone, like in this case, you see it form in a strong resistance zone. So in summary, candlestick express the ongoing battle between buyers and sellers. Strong bullish or bearish pattern reveal dominance, while doji shows hesitation. Context, structure, key level, and flow gives meaning to each candle. So being able to recognize some of this candle formation may improve your timing, precision, and confidence in reading real market pressure and who is actively in charge or may soon get the momentum to push the market either upward or downward depending on the direction that you're looking at, right? So these things is very important as long as price action trading is concerned. You can't ignore it, right? You can't ignore these things. They're important. So being able to read this pattern is going to give you an edge to move with institutions or being able to align with them when they go into the market. You may be a bit late because of entry, because you have to read confirmation, but it's going to help you align your trade and know the direction that the price is going to next. Only thing left after confirmation is for you to work on your entry, right? So that takes us to the end of this very topic. See you guys in the next video. Thank you.